Welcome back to Yahoo Finance Live, everyone. The House Energy and Commerce Committee held a hearing today and spared no questions to executives from some of the big oil and gas companies here in the U.S. Exxon, Chevron, and BP, and some others had their executives present, and they were blamed for surging gas prices, plus some of the pain at the pump that Americans are seeing right now. Here with more, and for a discussion on this, we've got Representative Kevin Brady, Republican from Texas. Representative Brady, good to have you here with us today. We want to play a quick clip from that very hearing, and we'll get your reaction on the other side.
Right.
Because oil is a global commodity, Shell does not set or control the price of crude oil. Similarly, Shell does not set or control the price that consumers pay. Indeed, it would be illegal for Shell to do so because nearly all Shell-branded retail stations in the U.S. are owned by independent operators who set their own prices in the marketplace.
And so, Representative Brady, when you hear about some of the pain at the pump that Americans are experiencing right now, what, from your perspective, is the role that several oil and gas companies are playing very squarely in how much those costs are getting passed on to the consumer?
Yeah, so on Washington, I think everyone realized this was just a political theater, a dog and pony show, really for Democrats to try to shift blame away from their policy decisions that have driven those prices at the pump up high and will continue to be higher. Ironically, the same committee just a few weeks ago hauled the same executives in front of them and demanded to know why they weren't committing to reducing their oil and gas production going forward. So, pretty hypocritical to say the least. Look, you got to give Democrats credit. They said during the election or during the campaign, and President Biden as well, that they were going to drive prices up. They're going to try to limit and kill oil and gas jobs and discourage that type of development here in the United States. That's what they've done. The problem is, of course, inflation is at a 40-year high. The price at the pump is really hurting a lot of Americans, especially low income and people of color. So they're in a bind. I think they're looking for a political way out.
Congressman, good to see you. I think you're referencing, Ro Khanna, who did criticize those executives back in October for not reducing their production. But right now we have a problem with the administration would tell you 9,000 open permits that the big oil companies are not drilling on. Why aren't they ramping up production?
Yeah, and that's just economically illiterate. There are 100,000 leases pumping right now. There are leases that aren't either performing, they are locked in, they don't have their permits, or they don't have a way to connect to a pipeline to actually deliver that. Most of those wells will take years to be developed, frankly. And so as we saw at the hearing today, each of those executives talked about massive investment they're making in increasing production. They are getting no leases at all, onshore or offshore, and they are using an incredible amount of money to develop renewable fuels and carbon capture and other clean energy type of technology as well. So, look, Democrats have themselves to blame here and no one else.
Well, according to the latest NBC poll, when asked who they blame for inflation, 38% said President Biden, 28% said COVID, 23% said corporate price increases, and then a small share cited the Russia-Ukraine invasion. So obviously COVID and Russia invading Ukraine, not things that the U.S. had control over. But what should the Biden administration and even the private sector be doing to try and bring prices down?
Yeah, and as you know, inflation's been raging for a full year now, way before the Russian war on Ukraine. And frankly, inflation is accelerating right now. I think most Americans are bracing for even higher prices. I think that the answer to your question is for the Biden administration, stop making it worse. Right now, they're looking at more spending in a Build Back Better bill, more tax hikes that will end up in higher prices for consumers. And of course, I haven't seen any solution. We're all hoping for one about the worker shortage because that's driving so much of inflation as well. So I think the American public, feels like they're in a recession or a depression already because they've lost so much purchasing power and they don't see any solutions coming forward.
It's really interesting because what we heard from many banks is that some of their consumers hadn't been saving at a rate like this in years. And so now, of course, perhaps tapping into some of that savings because of inflationary measures, also because of some of those costs that are getting passed on to them because wages are higher for some of these worker positions. And then additionally, the supply chain issues that companies are having to navigate. So with all of that in mind, I question, what would you have done differently in order to ensure that Americans wouldn't feel the majority of some of the pain that they are feeling from inflation, and especially at a time where they are seeing exactly what the causes of that inflation were, whether or not it was the pandemic, whether it's an international conflict as well, that's also weighing into that equation?
Yeah, and so one, that's a really fair question. I think the answer is twofold. One, that March $2 trillion COVID stimulus, frankly, drove a lot of demand, stimulus checks, a lot of new federal spending into economy that didn't need it. Also, a lot of the benefit programs, the unemployment benefit program, the Affordable Care Act, healthcare, those subsidies were so lavish, they create a barrier to reconnecting people to work. And I think that we still have some hangover from that even today. And so I think that, one, those were major mistakes at the time. Secondly, I worry the Biden administration wants to repeat those same mistakes in this new $1 to $2 trillion Build Back Better, has some of the same problems within it.
Doesn't sound like a whole lot of excitement for that, even on the left, if you ask Joe Manchin. But you mentioned the worker shortage here in this country, which is a major issue. But all the while, you've got some former Trump administration officials urging your governor, Greg Abbott, to declare the southern border an invasion. Given the worker shortage and 11 million open jobs, at some point, don't we just need more workers here?
There is no doubt that I think the number one priority beyond this war for this administration needs to be workers, because it's driving so much of the supply chain problems, the inflation problems. Frankly, it's weighing in on growth, certainly along Main Street businesses. We can't find workers to man the production lines, to assemble the products, to deliver those products. And so our frustration, obviously, in Texas is that we are paying such a steep price for these open borders in sex trafficking, criminal gangs, drug trafficking, and fentanyl, which is affecting the whole country. And so facing what could be in a few weeks another surge created by the Biden administration of illegal migrants into the U.S., certainly states like Texas, we're looking at every option to try to make our communities safe. And it's very frustrating. The administration is going full force ahead in ending Title 42, which frankly needs to be extended, and we pay the price for it.
So then, in terms of better alternatives to really solve the sort of skills gap that we're seeing in terms of having many more open jobs that we do have people to fill them, what would you propose that perhaps could fix this solution?
Yeah. So first, end all COVID-era emergency programs that are barriers to people returning to work. And we still have some of those in place. Secondly, we ought to have rather than spend, $500 billion on subsidies for $80,000 electric vehicles, instead invest that into the incentives that will get people off the sidelines and back into work. As the Great Resignation really isn't the elderly. In fact, those who are 55 and older are returning to work. It did it pretty quickly. Our challenge is the 25 to about 54, sort of that prime working age that we all depend upon. They are not returning to the workforce. That's where the administration ought to be focused. And you would find, I think, bipartisan support for trying to reconnect those workers to their jobs, because it is a huge crisis right now.